Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Buyer beware. Caution, caution, caution. Be careful. Be extremely careful if you are buying American Eagles or any type of silver online right now, as premiums are record highs. You do not want to be paying $11 over spot for an American Eagle. You're better off going to your local coin shop where they might only charge you a couple dollars over spot. I am curious, if you are going to your local coin shops, what are they charging per ounce for silver right now? Are they having these high premiums that APMEX and JM Bullion is? It's definitely dangerous waters because there is the highest demand for silver we've seen in a long time, which means the most people are buying silver right now as prices and premiums are extremely high. Yes, the price of silver is low, but you're still paying $23, $24 for an ounce of silver, which is crazy because at your local coin shop, you might be able to get it for $15, $16, $17. I know I've talked to a couple people and they said they're charging around $17 per ounce right now, but still, I would not be surprised if coin shops boosted up their premiums since the demand for silver is going through the roof. So I have a couple articles I want to talk about and share with you guys right now. First is from FX Empire talking about the silver price forecast, how silver markets rallied significantly close to close out the week. So silver markets rallied rather significantly at the end of the week to pierce through that $13 level. It was a pivotal point. At this point, the markets looked likely to continue to try to build up a bit of case as precious metals have been oversold. So we've been into oversold waters as people were dropping, panic selling, doing all that shebang, that goes along with fear and emotional attachment into the markets. So silver markets rallied during the trading session on Friday, piercing through that $13 level, an area that has been important more than once. By doing so, it looks as if the markets are ready to continue to see a little bit of volatility and perhaps attempt to try to build a bit of a base, as we've seen in this market so far too oversold. And so they're saying they're trying to build some stable lines, build some stability underneath itself, so we can get a point to start from, so we can get some legs at our feet, a foundation to start rallying. So that being said, the silver markets also have a bit of an industrial demand component put into them as well. So obviously, the part will fail at the end of the day that silver is used for precious metals as well. See, that being said, I do not think the US dollar losing a little bit of strength helps as well, as the greenback strengthen does tend to work against these metals. And that's just talking about how the dollar index is extremely close to where silver prices are headed. If the dollar index is high, precious metals are low. If the dollar index is low, precious metals are high. So to the downside, I see the $12 level as massive support. And if we break below that level significantly, it's likely the market goes looking towards the $10 level. The $10 level is also supportive as well, so I do think that there will be a bit of a bounce sooner rather than later to the upside, and I believe the market may look going towards the $15 level, even possibly the $16 level. Silver is highly volatile. Actually, it's more volatile than gold. It gets higher highs and lower lows. It goes to the extreme that gold does. It gets exaggerated off of gold prices. So, and typically it will take its clue from gold, like I just mentioned. In fact, it's probably easier to buy gold than it is silver, but the two tend to move in the same overall direction under normal circumstances. I have no interest in shorting. So I thought that was an interesting point with definitely some interesting, stuff. So now we're going to be talking about something else. So silver price is in uncharted waters as they decouple from gold. And that's what I always talk about. When is silver price going to separate from gold's price? When will they have a market of their own? Right now, the gold to silver ratio is sitting at 118 to 1, which means that silver is actually outperforming gold to some extent, because we saw the ratio at 123 to 1 a couple days ago. So a really astonishing thing has been happening in the precious metals market. The gold to silver ratio has gone where it's never been before. So as the futures market closed on Thursday, it was 124 to 1. Now it's cut back a lot, but the article brings a very good point. So that is, it's required 124 ounces of silver to buy 1 ounce of gold. The highest previous recording was 1991 when it hit 100 to 1. The silver number also touched 100 briefly in 1942, but apart from that, silver's never been in 3 digits until now. And now we see it sitting in 3 digits, and it could stay there for a while. So as one U.S. commentator pointed out this week, never in 5,000 years has silver been this far undervalued relative to gold, which is a very interesting and great way to put it. That's dangerous. That's scary. So for much of its history, the gold to silver ratio was 16-1, but the last time that level occurred in 1884. In modern times, the silver end of the ratio has been blown out to the 90 to 1 ounce level. And actually in the 30s, FDR changed the gold to silver ratio from 16-1 to 75-1. He dramatically manipulated the markets of silver and undervalued it, and it really hasn't recovered since. So it's an easy ratio to figure. The higher the silver number, the higher the fear factor among investors. It indicates that gold is viewed as a safer haven metal. So people look at gold as a safe haven metal, which means the silver market's extremely small. So Wheaton Precious Metals, listed on both New York and Toronto stock exchanges, has a portfolio for gold and silver companies. It asked in a recent investor paper whether the gold to silver ratio still applies. Was it a financial knickknack from bygone era, or does it still serve as a reliable indicator in the condition of the global monetary system? The latter is right, it concluded. The latter is the right answer, it concluded. So the Americans fought over presidential election over silver. So first though, some silver background. So from 1687 till about 1870, the ratio stirred little from 16-1, and by 1912 it had reached 30-1. Fell sharply in World War I, obviously, then bounced well over 60-1. The Great Depression, perhaps significant to those wondering where we are headed right now, it collapsed in the late 1960s and bounced again after the 1987 crash. So people of two countries have silver deeply embedded in their psyches. One is China, where the metal is standard form of currency from time of the Ming Dynasty until November 1935. It was abandoned then, and only because China could not control silver use and had large amounts of the metal flowed out of the country, causing financial escalation internally. The other is the United States, where when there's trouble, investors head for silver. Earlier this month, the U.S. Mint announced they had sold out of American Eagles, the most popular silver product they offer. Americans are back in a silver frenzy, it would seem, and that's true because we've seen silver shortages several times throughout the past couple of years. The U.S. Mint in February sold 650,000 1-ounce silver eagles, but in the first 12 days of March, it moved 1.57 million of them before shelves were bare. That is absolutely astonishing. At the same time, it was reported the precious metals dealers across America had sold all their silver products. And they're talking about local coin shops. They're talking about JM Bullion having a 15-day waiting order and $300 buy order minimum. So one presidential election was fought largely over silver. In 1986, the Democrats wanted both gold and silver as legal tender. I wish it was still like that. Whereas the Republicans who won wanted a gold standard only. Anyone interested in silver is familiar with the attempt of the 1979 oil-rich Hunt brothers, Texas, to corner the silver market, accumulating 55 million ounces by September 1979, or 8% of the global supply. That forced silver from the price from $11 to $50. But while they bought the physical silver, they also took huge futures contracts. Then the price of silver collapsed some more as supply flooded the market, and the fortune disappeared with the collapse. See, in 1997, it was reported that Warren Buffett was accumulating silver. The metal's price was depressed. He cashed in his profit in 2006 by the time silver recovered. So, if you see the pattern here, it's showing really where silver can head. It shows silver crashing and then silver recovering, silver crashing and silver recovering. So I hope you do not sit too loosely with silver's price, just giving your faith away or losing the faith that silver can get back up to that $20 range, because it easily can. The gold to silver ratio is normaling back, or is correcting itself back down to more normal levels, and this shows that silver is actually outperforming gold right now. So silver actually does have more potential, especially as the ratio is lowering. So silver should behave more like a precious metal, or should be behaving more like a precious metal at least. So here's something else to keep in mind about the gold to silver ratio. So in commentary last October, Mr. Fulp wrote, in times of financial distress and economic calamity, silver tends to behave more like precious metal, with the widespread hoarding of speculation trickling down from the gold market. He also noted that the ratio in the mid-80s 5 months ago was highly anomalous and would expect it to drop. But it has not. We have never seen 124-1 before, and silver has yet to be put on a spurt. So, like with other financial events at present, it seems we could be in uncharted waters with silver. So we are in an area that we've never seen before, so we don't know what's going to happen. That's another thing to also remember. We don't know what's going to happen. We are in an area right now that really is uncharted territory. So what we think should happen, we can't even compare it to the historical data. Usually, if you're looking at a market, you look at the historical data, the patterns, you look at the patterns, and you can tell, usually you can get a pretty educated guess on what's going to happen. But we've never seen the gold to silver ratio so high. We've never seen times so dire, so extreme, especially the unknown variables that are occurring. We don't know. So we really are in a blindfolded stage right now, and I guess all we have to do is play it out. So anyways, I hope you can strategize off of that and profit from it, because there is a lot of potential. So anyways, I'm going to wrap this video up here. Hope you enjoyed this video. If you did, make sure to smash the like button. Also, make sure you subscribe if you're new. The link to these 2 articles will be in the description. Anyways, thanks for tuning in. I'm out. Peace.